Well, what is going on, guys, and welcome into the video. Well, like we've been discussing on this channel for almost a whole year of 2022, we may finally get official confirmation that we are in a recession, and there are some signs pointing to it being bad, and earnings is once again giving us further signs as well. Is there any hope at all? I mean, is this going to get a lot worse? And will we see a disaster greater than the Great Recession coming soon? Let's explore that today and get you guys answers. I just asked in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Alright, so let's kind of define a recession here quickly just to make sure we're all speaking from the same sheet of music per se and starting on the same baseline. All you need to be in a recession is 2 consecutive quarters of declining GDP. Now, yes, there are other measures and ones that incorporate other data points and are probably actually more accurate, but the media will use the lowest bar possible because putting out recession articles and videos that gets clicks is really the way to go with that, so that's what we're going to use here. The actual announcement does not come until Thursday, I believe, but the Fed's own projections show GDP being negative for this quarter, and it was negative for the previous quarter, meaning that we are in a recession. Not a possible recession, but a confirmed recession. And that's just the start. I mean, look at Walmart's earnings from Monday. And look at the headlines from my Google search. I mean, there are the top 3 headlines right there just by typing in Walmart earnings. Walmart earnings sends stocks plunging, renews retail worries. Walmart's profit warnings show inflation is still a big problem. Walmart tumbles after cutting full year outlook. This would seem to be a disaster all the way around, or is it? We will discuss that point in just a second, but Target was a disaster last quarter too, and now Walmart is a disaster this quarter, and tons of companies are lowering guidance to include huge large cap companies, so this honestly is not good at all no matter how you look at it. So now that we are in a confirmed recession and earnings are eroding away, how big will this recession be, and am I concerned at all? And more importantly, how the heck do you handle this madness with your stocks? To me, the best way to approach this is to look at the facts. Not headlines, not narratives, not projections, not this chart could mean this or this graph could show that, but just facts. So let's start with Walmart's earnings since we just discussed them. The headlines were scary across the board, but did you actually listen to the earnings call? And my guess is most people did not actually listen to the call. On the call, they acknowledged inflation was hurting their profitability. There is no doubt in my mind there, and I think that is really no surprise if we're all being honest. But what is a surprise is why they cut their guidance for this year. It's not because the consumer is spending less in Walmart like they do when we are in a deep recession and consumer spending really cuts back. Walmart is cutting their guidance this year due to their inventory glut they have, and now they need to dump that inventory at cheap prices from a management mistake of essentially over-ordering. They acknowledge that they made the mistake, and the consequence for that mistake is lowered guidance. They said it on the call, but that doesn't make for an exciting article or a headline, so you got what you got instead with those headlines. But it actually gets even more contradictory to the fear narrative being discussed everywhere on their earnings call, because they also said consumer growth is expected to grow next year, which totally contradicts the worst recession ever and fear narratives that are out there. Walmart would not be saying on an earnings call they expect that if they did not truly think it. This was the earnings call to take your lumps and really lower those expectations and really put kind of the worst case scenario out there. If they saw something truly troublesome in what they're looking at, they would have said as much on this call. So once again, the media and YouTube narrative is not matching what the company said on the actual earnings call. So next, let's look at the facts around GDP, as that is the metric for being in a recession or not, the one that we are looking at. GDP growth was at almost 7% prior to the Fed announcing and then implementing their strategy. And GDP growth, for context here, since we all kind of need it, for the 5 years prior to the illness crash was in the mid-2s. So what does that mean exactly? It means the economy was too hot at the time, and that is partly explains why we have so much inflation in the economy now. And basically the economy needed to be slowed down to help with that inflation. And with the bar being so low to technically be in a recession, it was going to happen soon as the Fed tried to slow inflation in the economy, and that is exactly what has happened. So now that we're in a recession, how the heck does that compare to the Great Recession? And let's look at one of the biggest pieces of the Great Recession, and that was unemployment peaked out at over 10% during that time, and it took 7 years to get back under 4%. If you were job hunting at that time, there were no jobs available. It was brutal, and it was at every level. I mean, entry level to executive, the entire job market just sucked. Now, right now, despite all the mass layoffs last month, we were still sitting at 3.6%. And if you want a job here in the US, there is one available. Now, I personally think we will see unemployment rate go up over the coming months through the end of the year. But here's where the facts will not match the narrative in the media and on YouTube. The unemployment rate has to triple to be in the ballpark of the Great Recession, which saw a 10% unemployment rate. Think about that for just a second. If unemployment goes up 50% by the end of the year from here on out, which the media and everyone will just freak out completely about, you are only just past the halfway point of the unemployment rate of the Great Recession because, you only went up 50%. You didn't triple like you needed to get there. Mass layoffs last month only gave us an unemployment rate of 3.6%. That's a historic low. Also keep in mind, recessions are considered part of the normal business cycle. They're unavoidable, and you are just hoping that there is not a catalyst like the entire financial system collapsing in 2008 that would make it substantially worse. But recessions are a perfectly normal part of the business cycle, which leads me to my next point. There have been 5 recessions since 1980, and this one makes 6. Can you name the other 5 without Googling it? I mean, seriously, try to name the general dates of those other 5 recessions since 1980. My guess is not too many of you got all 5 right. What this tells us is that most are very benign temporary events. But I suspect we will continue to hear lots of experts tell us how this could be like the Great Recession, or even worse, a depression, and this chart is showing this and that indicator is showing that, which means the world is ending and all of that good stuff like that, because that is what gets clicks and views and all that sort of stuff. But I totally get it, guys. What the heck should you do then? I mean, even if it's not so bad, the recession word is bad, and if we do have one, isn't that bad for stocks? We will look at specifics on stocks and recessions and what to do in just a second, but you can also make sure you're prepared to take advantage of all this by using the coupon code HODL that expires this weekend to join the Market Insiders private group, where you can work directly with me and a group of 6- and 7-figure investors. And we have 4 free courses for you to take, hundreds of tutorials. We have live weekly Q&As, and sometimes more than that. You can also see my watch list with price targets, my buy and sell alerts. So check out the pinned comment and get your spot now using that coupon code that expires this weekend. Now, for the overall markets, it generally does not go well for stocks, but not every recession has been a negative for stocks, honestly. And on occasion, stocks soar like in 2020, which I agree was an anomaly, but it still happened. And actually, going back to super high inflation times that we've never seen before, and probably honestly we'll never see again, during the 1981 to 1982 recession, the S&P actually returned slightly positive as well. And furthermore, there are stocks that thrive during recessions, and since I don't buy index funds, I don't care about the index fund returns or market returns or whatever, but I care about the individual returns of the stocks of the companies that I buy. Great stocks do not track the indexes. I honestly don't care what happens in the short term, and as a matter of fact, I love recessions and stock crashes, and let me illustrate why with this simple exercise. You may have heard me say it before, but it illustrates the point perfectly for why I love recessions and crashes. Raise your hand if you wish you had bought shares of Apple at $60. Anyone? Anyone at all? Okay, well, what about $3 per share? What about 30 cents per share? You could have bought Apple at all 3 of those prices during the past 3 recessions we had here in the US, and I could play this game all day long with many great stocks. Great companies with great management teams that have great balance sheets always thrive over the long run despite the gloom in the room narrative that persists during these downtimes. So for me, I view a recession as a good thing for me as an investor because I can add shares cheaper than I should be able to on great businesses. Now, sure, you're absolutely right. I will be down in the short term. But we say it all the time, nobody can time the bottom. So honestly, how the heck can you expect not to be down in the short term if you can't do that? But bigger picture, times like right now, you are getting once in a decade type opportunities to add great stocks at great prices. Those type of opportunities are how you build true wealth. And if you want to have myself and a group of 6- and 7-figure investors helping you through this chaos, and you want direct access to me and to be on all those great live streams and a ton more, don't forget to check out the Market Insiders private group and use the coupon code HODL because it is expiring shortly for you to join, and you get to keep that coupon code forever as long as you stay a member, so don't miss out. And click this video here to see what I'm selling, and click this video here to see what I'm doing to make big money in this market. So thanks for watching, and we'll see you in the next one.